Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. Today's session is one of the most important session that I have taken till now in this year, I can say. So the Reserve Bank of India has released the revised priority sector lending guidelines, and the master direction for the priority sector lending has been released in the 2025, and this is the first time after the 2022 that such a major decision has been taken, such a major revision has been done in the priority sector lending guidelines. Okay, so this session is going to be very important for all of you who are preparing for the NABARD regulatory body examinations or who are preparing for the RBI examination. Okay, so in this session we are going to discuss the revision that has happened in the guidelines on the priority sector lending, the master action that has been released by the Reserve Bank of India for the priority sector lending, and we will also discuss the notification regarding the priority sector lending certificate that RBI has released. So major decisions have been taken by the RBI that we are going to discuss in today's session, and this is very important from your NABARD examination perspective and from the RBI examination perspective. So let's get started, and good morning to all of you. So first, before starting with the session, do subscribe to the YouTube channel of EduTap and do join our Telegram channel where you will get the PDF of the session. Okay, so the link for the Telegram channel is provided in the description box below, and the PDF is going to be provided in the Telegram channel. So let's get started. So the RBI has released, the Reserve Bank of India has issued the revised guidelines on the priority sector lending after comprehensive review of the existing provisions, taking into account the feedback from the stakeholders. Okay, so the new guidelines, they will come into effect from April 1, 2025, including the major changes that the RBI has brought. So Reserve Bank of India on March 24th, 2025 has brought some major changes, some major update in the priority sector lending guidelines. And with respect to these major revision, with respect to these major changes, the RBI has released the master direction of the Reserve Bank of India priority sector lending targets and classification directions 2025. Okay, so as there were the major revisions that RBI has done in the priority sector lending guidelines, as the major update RBI has brought in the priority sector lending guidelines in the 2025, so the RBI has released the master direction. Now these directions shall come into effect from April 1, 2025, and they shall supersede the earlier directions that were the Reserve Bank of India priority sector lending targets and classification directions of 2020. So these new master direction is going to supersede the earlier directions of the 2020. And why the RBI has released this master direction? Because there were some major revisions, some major update that the RBI has brought in the priority sector lending norms. Okay, so now these directions, what are, you have to understand before starting with this master direction, before starting with the major revision that has been done, you have to understand that what is the priority sector lending and why is it followed in our country. So these directions that are the master directions, they are issued with a view to provide a framework for ensuring that adequate flow of capital, there is adequate flow of credit, there is adequate flow of money from the banking system that goes to the important sectors of our country. Okay, such as the agriculture, such as the micro, small and medium enterprises, the housing, the export credit. So we want that there should be a flow of credit that should go from the banking sector to the important sectors of our economy, to the developing sectors of our economy. Okay, so to ensure that adequate flow of credit is happening from the banking sector to the banking system to the sectors of the economy which are crucial for their contribution in the socio-economic development. So that's why the priority sector lending norms were introduced, so that there is the flow of credit that goes to these important sectors of the economy. Okay, with the focus that was given to specific segments whose credit needs remain underserved despite being credit worthy. So there were the different sectors that were credit worthy, but they were not getting adequate credit, and that's why the Reserve Bank of India brought these priority sector lending guidelines in 2020, which have now been updated and the master action has now been released. Okay, now these priority sector lending guidelines or the priority sector lending is very important for the flow of adequate credit to the important sectors of our economy which are not getting enough of the credit, or which were not getting enough of the credit. So in the master direction, the major idea is same, that these are the 7 sectors which are the focus areas. So the categories under the priority sector lending are the agriculture, micro, small and medium enterprises, export credit, education, housing, social infrastructure, renewable energy, and there is another, that is others. Okay, so these are the 7 sectors that are the focus areas that are the categories under the priority sector, and then there are some other category also. Okay, the limits for the commercial banks, the limit for the regional rural banks, small finance banks. So the minimum limit of the priority sector lending has not been changed, but you will understand that there is a lot of data change that has happened in regards to the classification that we will discuss in the coming slides. But in regards to the targets and sub targets for these entities, there is no change. Okay, so total priority sector lending that has to be done by the domestic commercial banks and the foreign banks with 20 branches and above, that is 40% of the adjusted net bank credit. For the regional rural bank, it is 75%. So 75% of the adjusted net bank credit. So the RRBs, they have to provide 75% of their adjusted credit to the priority sectors, to these priority sectors. Okay, and the small finance banks also have to provide 75% of their adjusted net bank credit to these priority sectors. Okay, so this is the idea. Now these are the earlier norms, so I'm not going to focus too much on this. We will focus on the revision. Okay, so as per this, I hope you have understood that there are the priority sectors that have been identified, and there is the minimum credit that should flow to these priority sectors. So for that, the RBI has given the minimum limits. So total priority sector should receive 40% of adjusted net bank credit from the domestic commercial banks, and there are the limits for the RRBs and the small finance banks also, that minimum this much credit should flow to the priority sectors. In the priority sectors, category wise division has also happened, that for agriculture there is a particular percentage of the credit that should flow to the agriculture sector, to the weaker sections, to the micro enterprises and such. Okay, now adjusted net bank credit, that is ANBC, and the CEOBSC is your credit equivalent amount of balance sheet exposure. Just the full form is required here from the current affairs point of view. You do not have to go too much in depth. Just try to understand that 40% of adjusted net bank credit means 40% of your adjusted credit should go to the priority sector lending. Okay, so there are the percentages that have been identified under the priority sector lending by the RBI that the banks, different banks, have to provide to the priority sector. Now coming to the revision that has happened. So to understand the revision or to understand the updates that RBI has brought in the classification, first you have to understand the old one, and then we will understand that what is the update that RBI has brought. Okay, so here the old one. So in the old one, in 2023, it was said that the urban cooperative banks, they have to provide 75% of their adjusted net bank credit to the priority sectors. Okay, so it was said that by the financial year 2025-26, so by the end of the financial year 2025-26, by the end of this financial year, the urban cooperative banks, they have to provide 75% of their adjusted net bank credit to the priority sectors, Okay, so this was the idea that was given, and there was the interim targets that were given. There were interim targets that were given for the sub targets for advances to weaker section. So for the weaker section, it was said that by financial year 2025-26, by the end of the financial year 2025-26, that is by March 31st, 2026, there is the achievement that should happen of the sub target also for the advances to weaker section, that is 12% of the adjusted net bank credit should go to the weaker section by the March 31st, 2026, by the end of the financial year 2025-26. So there were interim targets that were given. Okay. It was also said that the PSL sub-target for micro enterprises remains unchanged at 7.5%. That means 7.5% of the adjusted net bank credit should flow to the micro enterprises. Okay. Now, what is the update that has come? So, UCBs, they were earlier in 2023, as per the 2023 press release, the urban cooperative banks, they were required to achieve an overall priority sector lending target of 75% of adjusted net bank credit that they had to achieve by the end of financial year 2025-26, that is by 31st March 2026. Okay, and there were the interim targets that were also given. But now the Reserve Bank of India, in the revision, in the revised priority sector lending guidelines, the RBI has said that on a review, it has now been decided that the overall priority sector lending target for the urban cooperative banks is going to remain 60% only. So now it is said that the urban cooperative banks, they have to provide the priority sector lending of 60% of the adjusted net bank credit, okay, by from the financial year 2024-25 onwards. So this target was 75%, that has been reduced to 60%. So this is a major update that the RBI has brought, that you need to keep in mind that before it was, the target was 75%, that had to be achieved by the end of financial year 2025-26, but now the target has been revised, and now the target from the financial year 2024-25 onwards is 60% of the adjusted net bank credit, okay. So the target were increased, and by the 2023-24, by the end of the financial year 2023-24, by the end of the financial year 2023-24, that is by the March 31st 2024, the UCBs had already achieved 60% of the adjusted net bank credit. This was provided to the priority sectors, okay. Now the RBI has said that the further increase is not required from the UCB side. Further increase in the lending in the priority sector area is not required because the UCBs are not able to achieve it. So the RBI has said that it is fine from the financial year 2024-25 onwards. You can continue with this 60% of the target for the priority sector lending, okay. So this is a major revision that has come. Now coming to the advances to weaker section. So advances to weaker section, as earlier it had to be increased to 12%. So this will continue, that now 12%, this advances to weaker section, this is not changed. Only the overall target has been kept at 60%, but for the weaker section 12% is still the target. 12% is still the target, and that target has to be achieved by the end of financial year 2025-26, okay. So for the weaker sections, the target is still 12%. For micro enterprises, 7.5% of the adjusted net bank credit has to be provided, but the total priority sector lending target has been reduced from the final target of 75% to 60%. Any confusion here? Anyone? 40% of the adjusted net bank credit. Now I am not going too much in depth in the adjusted net bank credit, because here you have to understand the whole of the balance sheet of the banks. Here you will have to understand that, okay, this is the total credit that the bank gives. Out of this you will have to deduct the bill rediscounted by the bank. Then you will have to add some of the investments, like the different loans, that different bonds that the bank are engaged in. So that is a very complicated and a very lengthy process. That is not required. You do not have to go through the balance sheet. For the current affairs perspective, it is not required. For the NABARD, it is not required. For the RBI, if there is the requirement, this will be catered to in the static portion of your course, okay. So adjusted net bank credit, it has a very lengthy calculation, okay. So out of the total credit, the bill rediscounted, that is deducted, then there are some additions that are done. So just remember that adjusted net bank credit, this is the actual credit that is flowing to the different sectors. Out of this adjusted net bank credit, 40% has to be 40% of the adjusted net bank credit the commercial banks have to give to the priority sectors. Now for the UCBs, the limit was 75%, which is now revised at 60%. So from financial year 2024-25 onwards, the UCBs have to provide 60% of their adjusted net bank credit to the priority sectors. For the weaker sections, the limit or the minimum limit is 12%. That will be achieved by the end of financial year 2025-26, and for the micro enterprises, the minimum limit is 7.5%. That is already achieved, okay. Any confusion here? We will discuss the weaker sections. Right now, is this clear? There are multiple updates that have happened. We will discuss them one by one. Weaker section, there is the like the criteria has been changed for the weaker section. There are some additions that have happened in the weaker section also, so that we are going to discuss. For now, just keep this in mind, that what has been taught here, okay. Okay, now moving forward, enhancement of several loan. So we have understood that for the UCBs, the total priority sector limit has been decreased and it has stand revised, and it is now 60% of the adjusted net bank credit. Coming to the enhancement of several loan limits, including housing loan limits, have been enhanced for the priority sector lending coverage. So before, the loans that were given, so this is the old criteria, that the loans that were given to individuals up to rupees 35 lakh in metropolitan centers with population of 10 lakh and above. So the loans to individuals, this was the limit. If the loans are up to 35 lakh that are given to the individuals, so they were considered under the priority sector lending. But now the limits have been enhanced, now the limits have been changed. So this is the updated direction, that the loans that are given to individuals for purchase or construction of a dwelling unit of a house per family, this is subject to the following limits now. So the limits have been enhanced. Before, you can understand that 35 lakhs was for the metropolitan centers, that was the population of 10 lakh and above. But now for the population of 10 lakh and above but below 50 lakh, the limit has been enhanced from 35 lakh to 45 lakh. Okay. So this is the idea, that the loan limits have been enhanced and there is a maximum cost of dwelling that has been specified, that if the maximum cost of the dwelling is 63 lakhs, then the loan limit for the centers with population of 50 lakh and above is 50 lakhs. In the centers with population of 10 lakh and above but below 50 lakh, so in these centers, in these areas, the maximum cost of dwelling, if it is 57 lakh, then the loan limit is 45 lakh. So these will be considered under the priority sector lending. So such loans will be considered under the priority sector lending. Okay. So to be eligible for the priority sector lending, to be eligible, if a loan has to be eligible, if a loan has to be eligible for a priority sector lending, to be considered under the priority sector lending, to be considered under the housing segment, so the loan has to satisfy both these criteria, that the maximum cost of dwelling should be up to 63 lakhs in these centers, and the loan limit has to be up to 50 lakhs only. It cannot exceed these limits. Okay, then only these loans will be considered under the priority sector lending. Any confusion in this? So before, the limits were different. Before, the limits were different and they were lower, and so less of the loans were considered under the housing loans. But now the limits have been enhanced, housing loans limits have been enhanced, and more of the priority sector lending coverage is going to be provided as the loan limits have been enhanced. Okay, and the centers with population of 50 lakh and above, they will get in these centers the loan limit is 50 lakh and the maximum cost of dwelling can be 63 lakh. So if the cost of dwelling is up to 63 lakh and the loan is taken up to 50 lakh, so these loans will be considered under the priority sector lending. So these are the different centers, and the loan limit and the maximum cost of dwelling has been specified in this. Okay. Coming to the next point, that earlier loans up to 10 lakh were given, or loans up to 10 lakh, they were considered under the priority sector lending in the metropolitan centers if they are for the repairs to the damaged dwellings units, and up to 6 lakh of the loans that were given, they were considered under the priority sector lending if they are given for the repairs in the other centers. But now the limit has been enhanced for the repairs also. If in the centers with population of 50 lakh and above, you are doing the repair of your dwelling, you are doing the repair of your houses, the loan limit is 15 lakhs now, and the maximum cost of dwelling should be 63 lakhs. So maximum cost of dwelling is going to be same, but for the repairs, for sure, for the repairs, for the construction, this was the limit. For the new house, this was the limit. For the repairs, this is the limit. And the limits have been enhanced for the metropolitan centers that have the population of 10 lakh and above. Before, the priority sector lending limit was 10 lakh. Like only the loans up to 10 lakh, they were considered under the priority sector lending. But now in the centers, in the metropolitan centers with population of 10 lakh and above, loan limit has been enhanced to 12 lakh, and in the other centers the loan limit has been enhanced from 6 lakh to the 10 lakh to be considered under the priority sector lending. So these are the housing loan limits that have been enhanced for the priority sector lending coverage. So more of the housing loans can be considered under the priority sector lending now. Okay, and it will help the banks to achieve their targets also. Is this clear? Next is in case of education. So enhancement of several loan limits has happened. In case of education, earlier loans to individuals for educational purposes including vocational courses not exceeding 20 lakh were considered under the priority sector lending. So if the loans were given for the educational purposes and these loans were less than 20 lakhs, if these loans were less than 20 lakhs, then they were considered for the priority sector lending classification. But now the limit has been enhanced for the education loans also. So the loans that are given to individuals for their educational purposes or for their vocational training, if it is less than 25 lakhs, then they will be considered to be under the priority sector lending. Okay, then their classification can happen under the priority sector lending. And so the loan limit enhancement has happened. Before the loan limit was 20 lakhs, now the loan limit is 25 lakhs. So the loan to individuals and for educational purposes including vocational courses not exceeding 25 lakhs will be considered as eligible for priority sector lending classification. Okay, so the limit has been increased from 20 lakhs to 25 lakhs. Next is your social infrastructure. Okay, for social infrastructure, before the bank's loan up to the limit of 5 crore per borrower for setting up schools, for setting up the social infrastructure like the schools, drinking water facilities, sanitation facilities, they were considered under the priority sector lending. Okay, they were classified under the priority sector lending, as well as the loans up to a limit of 10 crore per borrower for building healthcare facilities in the tier 2 to tier 6 centers, in the tier 2 to tier 6 centers. So if health facilities are being developed, if the healthcare facilities are being built in the tier 2 to tier 6 centers, then the loan limit was 10 crore to be considered under the priority sector lending. Okay. Now the limits have been enhanced for the social infrastructure also. Loans up to the limit of 8 crore per borrower for setting up schools. So it was before 5 crore. Now the limit has been enhanced to 8 crores for schools, drinking water facilities, sanitation facilities and such. Loans up to the limit of 12 crore, before it was 10 crore. Now the enhancement of limit has happened and now loans up to the limit of 12 crore per borrower for the building of healthcare facilities in tier 2 to tier 6 centers. Equivalent centers are those in category D. Category D is like the UCBs. In case of UCBs, in case of urban cooperative banks, the equivalent centers are those in category D. Category D means that the population is less than 1 lakh. So this is the idea that loans up to the limit of 12 crore, they will be considered under the priority sector lending for building healthcare facilities in tier 2 to tier 6 centers, or in case of UCBs, the category D centers. Okay, so this is the idea that there is the enhancement of several loan limits. In the category of export credit also, there is the limit that has been enhanced. In the case of agriculture also, the limits have been enhanced in various subcategories. But this would have been it would have been a very lengthy session if I would have included those limits also. So I have brought for you the most important limits that were discussed in the newspapers. So the housing limits, they were quite in news, as well as the education limits, they were in news. The rest of the limits you can see in the main master direction. In the master direction, you can see the other limits, but these are the most important limits that I have brought for you. You will have to go through the master direction of priority sector lending even if you are preparing for NABARD, even if you are preparing for RBI, because this is one of the most important directions or the guidelines of the RBI. Okay, so I have brought for you the major understanding, the major points. So now coming to the renewable energy. So in case of renewable energy, the old direction was that bank loans up to the limit of 30 crore per borrower to the borrowers for purposes like solar based power generators, biomass based power generators. So this much was the limit. 30 crores. This was the limit to be classified for the loan to be classified under priority sector lending for the renewable energy. Okay. For non-conventional energy-based public utilities like the street lighting system, remote village electrification, the limit was 30 crores. 30 crores was the limit for the loans to be considered under the priority sector lending under the category of renewable energy. For individual households, the loan limit was 10 lakh per borrower. Now, the update 3 that has come. So till the update 2 we have understood. Update 3 is that there is the broadening of the purposes based on which loans may be classified under the renewable energy. So before, what was happening, that renewable energy was specified, that solar based, biomass based, windmills or micro hydel. But now there is the broadening of the classification or broadening of the basis under which the loans can be taken under the renewable energy. So rather than mentioning the solar power, biomass power, renewable energy has directly been mentioned. So here any renewable energy, let it be hydropower, let it be geothermal power, so any renewable energy will be considered under the renewable energy category of the priority sector lending. So before there was the categorization that was happening, and only the specific renewable energy was coming under the priority sector lending, but now directly the renewable energy has been mentioned rather than categorizing it. So all the renewable energy will be able to come under the priority sector lending, and the limit has also been increased from 30 crore to 35 crore for the banks loan up to the limit of 35 crore to borrowers for renewable energy based power generators, for renewable energy based public utilities. So rather than mentioning solar power, biomass power and such, they have directly mentioned the renewable energy, so that all kind of renewable energy can come under the priority sector lending. Okay, so bank loan up to the limit of 35 crore to borrowers for renewable energy based power generators and public utilities like street lighting and such. So these loans will come under priority sector lending under the category of renewable energy. For individual households, the limit has remained same, 10 lakh per borrower. Coming to weaker sections now. Till now, any confusion anyone has? Till now, any confusion? So weaker sections. See, priority sector loans to the following borrowers, it is considered the priority sector lending to the weaker sections. So small and marginal farmers are the weaker section, the artisans, village and cottage industries, beneficiaries under the government sponsored schemes, scheduled caste, scheduled tribe, the beneficiaries of differential rate of interest scheme, the self-help groups, the distressed farmers, the distressed persons, individual women beneficiaries, a person with disability, minority communities, they were considered as weaker sections. But now what has happened? Under the update, under the revision that the RBI has brought, under the revision that the Reserve Bank of India has brought, there is the expansion of the list of eligible borrowers under the category of weaker section. So there is the expansion of limit that has happened of the eligible borrowers under the category of weaker section. So in the weaker section, before there were 11 categories that were present. Now in total there are 13 categories. So that means 2 new categories have been brought. Okay, so transgenders have been included in the weaker section, as well as there is another like individuals and individual members of self-help groups, joint liability groups. They have also been added in the list. Okay, so these are the weaker sections. Now the weaker section list has been expanded. So expansion of the list of eligible borrowers under the category of weaker section, along with removal of existing cap on the loans by UCBs. So let's see. So the individuals and individual members of self-help groups or joint liability groups satisfying the criteria under the microfinance loan, so these are also the weaker section. So what is the criteria under the microfinance loan? So microfinance loan is defined as a collateral free loan where no collateral has to be given. Usually when you take loan, you have to give gold, you have to give house or property as a collateral. So if you want to take a home loan, your home is a collateral. If you want to take a gold loan, your gold is the collateral. If you want to take a loan on the land is the collateral. Okay, so microfinance loan, they are such loans that are collateral free where no collateral has to be given to the bank, the household, and these microfinance loans are only given to such households that are having annual household income up to 3 lakh rupees. And for this purpose, the household shall mean an individual family unit consisting of husband, wife and their unmarried children. Okay, so individual and individual members, they will be considered under the weaker section if they are a part of self-help groups or joint liability groups and they are following or they are satisfying the criteria under the microfinance loans. Okay, now individual women beneficiaries up to rupees 2 lakh per borrower, so they will be considered under the weaker section, and this is the limit for the lending. So individual women beneficiaries that are getting up to 2 lakh per borrower, the limit of 2 lakh per borrower is there, and which is applicable for other banks, but it is not applicable for urban cooperative banks. Okay, so there is the removal of existing cap on the loans by UCBs to the individual women beneficiaries. So UCBs, if they are giving the loan of let's say 3 lakh also, 4 lakh also to the individual women beneficiaries, that will also be considered under the weaker section category. Okay, so individual women beneficiaries that are getting up to 2 lakh per borrower, so they are under the weaker section. But let's say in the case of UCBs, this 2 lakh per borrower limit has been dissolved, it has been removed. So for UCBs, there is no such limit for the individual women beneficiaries. Now transgenders have also been included in the weaker section criteria. Any confusion here? Mishsu, what basis they choose means? I didn't understand your question. These are the priority sector lending norms that certain sectors should get the lending as they were not getting enough of the lending from the bank. So these certain sectors have been identified that at least minimum this much limit of the loans should go to these segments. Okay, so this is the idea. Now the updates are finished. We have discussed 4 updates. Okay, so let me just revise the updates. So first update is that for the UCBs, for the urban cooperative banks, the total priority sector lending minimum limit is 60% of the adjusted net bank credit. So before it was 75%, that had to be achieved by the financial year, by the end of the financial year 2025-26, that is by 31st March 2026. This limit had to be achieved, but now from 2024-25 financial year onwards, the 60% of the adjusted net bank credit, this will be followed for the UCBs, though they have to achieve the 12% of the minimum limit for the advances to weaker section by the financial year 2025-26, by the end of the financial year 2025-26, that is by the March 31st 2026. So by the end of financial year 2025-26, they have to achieve the minimum limit of the credit for the weaker section. Okay, so this limit is continuing, but the overall limit has reduced from the 75% to 60%. Okay, now update 2 was regarding the enhanced limits of the loans. Okay, so enhanced limits of the housing loans, enhanced limit for the education loan, enhanced limit for the social infrastructure loans. So this we have understood. There are also the enhanced or different limits for export credit and agriculture criteria. So there are different categorization here, so that you can see in the main directions, but the most important criteria I have provided. Okay, next is the renewable energy. So there was the broadening of the purpose for which the loan is given under the renewable energy, and the limit has also been changed. Then the last update was regarding the weaker section. The list has been expanded. Okay, differential rate interest scheme, I will ask Gurkira sir to take the session on the schemes. So just basic idea is that these are the weaker sections. You only have to understand the update, that these are the categories that have been included, that individuals and individual members, they have been included in the weaker section list, and transgenders have been included in the weaker section list, and individual women beneficiaries, they were already available in the weaker section list, but their limit has been increased from 1 lakh to 2 lakh, from 1 lakh to 2 lakh, and for the UCBs this limit has been removed. That's it. Okay, for the schemes, if you want to understand any scheme, just comment in the comment section below. Comment the scheme that you want to understand, and I will ask Gurkira sir, because he takes the session on the schemes. Coming to the priority sector lending certificates. So priority sector lending certificates, let's say there is a bank A, bank B. Now bank B, it has to follow, like both are the commercial banks. Okay, they have to provide 40% of their adjusted net bank credit to the priority sectors. Okay, now the bank B is able to provide 45% of the adjusted net bank credit to the priority sector. That means the bank B is able to get, or bank B is able to achieve more than required. They had the minimum limit, or the minimum 40% of adjusted net bank credit they had to provide to the priority sector. This was the minimum limit defined by the RBI, but they were able to achieve 45, that is higher percentage they were able to provide to the priority sector. While the bank A is also commercial bank, which has to at least provide the minimum of 40% of their adjusted net bank credit to the priority sector, but the bank A is only able to achieve the target of 38%, and the bank A is only able to provide 38% of the adjusted net bank credit to the priority sector. So the bank A is falling short of 2%. Bank A is falling short of 2%. So bank A can purchase the 2% of the certificates from the bank B. Okay, so to enable the banks to achieve the priority sector lending target and sub targets by purchase of these instruments. So the priority sector lending certificates can be purchased by a bank from another bank. If a bank is not able to fulfill the target by themselves, they can purchase the certificates from the other bank, because the other bank is doing the excess of the lending to the priority sectors then. Okay, so in the event of shortfall, from the target, that you are not able to cover up the target, then you can purchase the certificates from the other banks. So to enable the banks to achieve the priority sector lending target and sub targets by purchase of these instruments in the event of shortfall, and at the same time it will incentivize the surplus bank, because the surplus bank will be able to get the extra fees for providing the certificates, will get some money for providing the certificates. So the surplus banks, they are incentivized for doing the good work, that they are able to achieve more than the target. So they have done some good work, they have provided more credit to the priority sectors, so they are incentivized by getting the money for selling their certificates, so thereby enhancing the lending to the categories under priority sector, so the overall lending is still higher. Okay, so this is the idea. The priority sector lending certificates, it incentivizes the banks that are providing more credit to the priority sectors by letting them sell the certificates that have done the lesser of the lending to the priority sectors. Okay, so now the priority sector lending certificates are of 4 types. The priority sector lending certificate in the agriculture category, that is all eligible agriculture loans except loans to the small farmers and marginal farmers. So such certificates that are related to agriculture. Let's say that a bank has fulfilled the overall 40% of the priority sector lending target, but the bank is not able to fulfill the sub target or the target for the agriculture, that is 18%. Okay, so the bank has fulfilled, the commercial bank has fulfilled 40% of the priority sector lending target, but the target for the agriculture, is 18%, or the target for the weaker section is, let's say, 12%. So they are not able to fulfill a particular target, then they can buy these certificates. So priority sector lending certificate for the agriculture, so this will help in the achievement of the agriculture target and the overall priority sector lending target. Priority sector lending certificate for small farmers and marginal farmers, so this will help in the achievement of the sub target of small farmers and marginal farmers and agriculture target and the overall PSL target. Okay, priority sector lending certificate for micro enterprises, it will help in the achievement of the micro enterprise sub target and the overall PSL target, and there is a PSLC general also that will help in the achievement of overall PSL target. Okay, so now what has happened, what is the change that has been brought by the Reserve Bank of India? So RBI has notified that there is a minor change that has happened. So now in this category of PSLC, small farmers and marginal farmers, as you know that the small farmers and the marginal farmers, they are added in the weaker section category also. So it is said that the PSLC, that the priority sector lending certificate for small farmers and marginal farmers, they will be eligible for all, they are all eligible loans to small farmers and marginal farmers. They will help in the achievement of the small farmers and marginal farmers sub target, the weaker section sub target, and the non-corporate finance sub target. The non-corporate farmers, NCF is the non-corporate farmers. For them also there is a sub target, agriculture target and overall PSL target. So there is a minor change that has happened here, that before the priority sector lending certificate for the small farmers and marginal farmers, they were only helping in completing the small farmer, marginal farmer sub target, agriculture target and overall PSL target. But now these certificates will help in completing or in achieving the sub target of small farmer, marginal farmer sub target, or the weaker section sub target, or they can help in the achievement of non-corporate farmer sub target, or they can help in the achievement of agriculture target and overall PSL target. So I hope this is clear. See, any lending that is happening to these priority sectors, they can come under the priority sector classification if they are following the criteria, if they are following the classification. Okay, the classification are like these. These are the classification that they are following this criteria. Then the lending, if they are following these criteria, if they are following these criteria for social infrastructure, or they are following the criteria for the renewable energy, or let's say they are following the criteria for the educational loan, or they are following the criteria for the housing loan, so such loans can come under the priority sector. Okay, So this I hope is clear. So the RBI had released the revised priority sector lending guidelines that we have understood. So there are the 4 major revision that has happened. Enhancement has happened of several loan limits, including housing loans. So there is change that has happened in the loan limits for education loan, for the housing loan, for the renewable energy, the limit has been changed. For the social infrastructure also the limit has been changed. For export credit for the agriculture also there are various limits that have been changed. Okay, but we have understood the most important ones. You can read the whole of the master direction because the whole document will be important anyway. Okay, broadening of the purpose based on which loans may be classified under renewable energy. So we have discussed that there is the broadening of the purpose that has happened under the renewable energy for the classification as the renewable energy. Okay, so before there were different categorization like solar power or biomass power and such, but now renewable energy has directly been mentioned so that all the renewable energy can come under the all the loans for the renewable energy projects can come under the renewable energy category if they are following the limit of the loan up to 35 crores. Revision of overall PSL target of for UCBs. So the overall priority sector lending target for the urban cooperative banks have been revised to 60% of the adjusted net bank credit. So that will be followed. That is going to be followed from the financial year 2024-25. Okay, onwards. So from financial year 2024-25 onwards, the PSL target for UCBs will be considered at 60%. Okay, now there is no target for 75%. There is only the target of 60% that the UCBs will have to maintain, that they have already achieved in the financial year 2023-24. So this target they have already achieved in the previous financial year and they will have to continue with this target in the future also. Now there is the expansion of list for the eligible borrowers under the weaker section. So this also we have understood. And the priority sector lending certificate, for this also there was a separate notification that was released that now the priority sector lending certificate for the small farmers and medium farmers. So these priority sector lending certificate, they will be considered, they will be counted for the achievement of small farmers, medium farmers, marginal farmers subcategory, weaker section subcategory or subtarget, and for the achievement of the non-corporate farmer subtarget or for the agriculture target and overall PSL target. Okay, clear? Semiconductor in which category? Only what is written, that only you have to keep in mind. Okay, so priority sector lending certificate for the small farmers and marginal farmers. So let's say a bank is purchasing this priority sector lending certificate for the small farmers and marginal farmers. So these certificates will be counted for the achievement of the sub target of small farmers and marginal farmers, sub target of weaker section, sub target of the non-corporate farmers, and agriculture target and overall PSL target. Clear? So this is the first question. I hope you will be easily able to answer this question. So I hope you will be able to answer this question. And this is the first question where you have to tell the overall PSL target for the UCBs, the revised one. Okay. Now this is the second question. Read the question very carefully and try to answer this question. Okay. So there is not a mention of a particular industry. It is only said that the micro, small and medium enterprises. Okay, you will have to read the whole of the master direction, but overall the micro, small and medium enterprises have been mentioned. Or you can write your query in the comment section below. I will check it and then I will revert to your query. Okay, I will have to check the whole master direction again. Okay, so this is the second question. I hope you will be easily able to answer this question, and do let me if let's say there are many students that are having the problem in the answer writing practice. So there is the Perspective 360 series that is going on Monday, Wednesday and Friday at 5 p.m. So in this Perspective 360 degree series in the YouTube, there is the answer writing practice that is taken by Jaskaran sir. He also gives a homework question and you can write the answer in the comment section below of the Perspective 360 that will be evaluated by the team. So there is free evaluation that is provided for your answers also. Okay, so do see the Perspective 360 degree series if you are having any problem in the answer writing. Okay, now thank you very much for joining the session. If you have any query, you can comment down below, and this is it for today. Do give me the right answer of the homework questions. So thank you everyone. Thank you for joining. See you in the next session.